Okay, hi teachers, hi everyone. Today I will present about chapters 26, Saving, Investment and Financial System. Let's begin to financial system. A financial system is a group of uh, in- institutions in the economy that have much one person's saving which are another person's investment. In other words, each transfer money from people who have extra funds to people or businesses that need funds for investment. There are two main parts of the financial systems, including financial markets and financial institutions. I will discuss each of them in the following slides. Firstly, let's look at financial markets. Financial markets allow sellers to provide funds directly to borrowers. In this case, there is no financial intermediary between two parties. Investor buy financial assets directly from borrowers, um, making financial markets an efficient way to transfer capital. Mm, One important financial asset is a bond. A bond is a certificate of uh, indebtedness, which means re, re, which means it represents a lot. When investors buy bond, they become creditor because they lend money to the insurer. The insurer promised to repay the principal at the maturities and make regular interest payments. Next, a bond has several important features, uh, like principal is the amount borrowers. Um, Coupons is the interest paid to bond bondholders. Maturities is the date when the lot will be repaid. Terms is the length of time until maturities. Uh, Investors should also consider credit risks, which is the possibilities that the borrower may fail to repay the debt. Finally, tax treatment refers to how interest income is taxed. Okay, next we come to stock. Stock. Uh, Unlike bonds, a stock a stock is a certificate of equity. When investors buy stocks, they become owners of the company's interest of creditors. Stockholders may receive dividends and benefits if the stock price increases. However, uh, unlike unlike bonds, stocks do not have maturity dates. Mm, Stocks have several key characteristics. Like first, stockholders are owner of the company. Second, stocks may pay dividends. Third, stock price change according to market conditions. Since stocks have no maturity date, investor can keep them as long as the company continues operating. Compared with bonds, stocks usually involves higher risk. Tax treatment also depends on the country's tax regulation. Um, Now let's look at the stock markets. Stock re- represents a claim to parental ownership in a company. Stocks are traded on organized organized stocks exchange. Their price are uh their price are determined by supply and demand. Companies also use the stock markets to raise money by selling shares. This is called equity finance. Okay. In addition, investors often use stock indices to measure the overall uh, performance of the market. This slide shows an example of stock market information. Beside the stock price, investors often pay attention to several important indicators. The PA ratio of price to earning ratios uh, compare the stock price with earning per share. Earnings per share or EPS is calculated by dividing profits after tax by the total number of shares. Another important indicator is divided yield with equate dividend divided by the stock price. Finally, a company's profits is after distribution is divided or uh, retained for future investment. Um, Besides financial markets, there are financial intermediate interm, intermediary risk. Okay, financial intermediaries allow seller to provide funds to borrowers indirectly. Uh, Banks are the most common example. Banks accept deposits from seller and pay interest. They then make loans to borrowers and change interest. Banks also finance, paying also facilities the purchasing of goods and services by prov- providing payment methods such as checks. Another important intermediaries is the um, mutual funds. Uh, a mutual fund sells share to the public and uses the money to invest the portfolio of stocks and bonds. Its main advantages are uh, diversifications and access to professional money mark, professional money managers. Now, now let's move on to saving and investment in national income accounts. One important identities GDP awards consumption plus investment plus government budgets plus net a post uh, in symbols y equals c plus I plus g plus ns. Is y is gross domestic products. C is consumptions. Y is investment. G is government budgets. And N is net impulse. It's a closest economy. There is no international strength, so N is equals zero. Therefore, uh, Y is equals C plus I. The sheet national saving is defined as income remaining after consumption and government spending. So, H alpha Y uh is Y since just C in C national saving can also be divided to uh private saving is uh private saving equal uh Y uh I don't know how to say sorry uh I guess there's a you can look at my slide private saving plus equal YTC public saving equal T less G. If T is greater than G, the government has a budget surplus. If T is less than G, the Romans has a purchase deficit. Sorry, I forgot how to read. Mm. Oh. Finally, let's discuss the meaning of saving equal investments. And closest economies as I. This is an important economic identities. It means that total national saving equal total investment. One are worth, the money that people save become the source of funds for investment. Therefore, one person's saving can finance another person's investment. This relationship helps businesses plan productions, create jobs, and supports economic growth. Finally, thank you for listening and attention. Goodbye and thank you.